I don't know if you've heard or not, folks, but the United States president has just said that he wants 1% interest rates in 2026, maybe even lower, maybe even lower. And that sounds amazing. Like when you think about 1% interest rates, you think, wow, that's pretty sweet, right? Like I could buy maybe my first house, maybe I could invest in some real estate. Maybe I could refi some debt. You know, if you're a realtor like me, you think, wow, that's definitely going to unlock some housing market activity. But what would this actually do to the economy? More importantly, the housing market. What if rates dropped even near 1% for housing? What if mortgage rates dropped that far? What would actually happen to the US housing market? And more importantly, what's really driving the incessant need and desire to drop rates to ultra low levels again? That's what we're looking at and talking about today, this chilly morning on the Housing Nerd channel. Hopefully you can hear me. I had a issue with my audio, so I'm using my computer audio. Hopefully it works okay. Let me know if you can't hear me. It's chilly. It's about 7 degrees today. That's where it came in when I just looked. I got my little fire here, but man, it is cold. It is cold. So yeah, let's talk about these 1% rates. If you haven't heard what I'm talking about, you can go to the Wall Street Journal. You can probably Google it. You can probably Google it with anywhere you want on the net, and you're going to find an article about what President Trump had to say about mortgage rates. He also talked about the next Fed chair and who that could possibly be. Will it be a stoolie? Will he put a stoolie in place that just simply does what he wants them to do? He was quoted as saying basically, hey, the president needs to have more influence on Federal Reserve policy and on monetary policy. Do you think that's a good thing? And again, what's driving this 1% rate talk? Is it all talk, or do you actually think rates will fall that far? Now, we're talking about the Fed rate. We're not talking about mortgage rates. But my hunch is that in some way of trickery, in some, behind the scenes, non-quantitative easing, fake money printing, real money printing way, they will somehow cajole mortgage rates lower. How they do that, I have no idea. I'm not sure they will do it, but my hunch is they will. And I think there's a big reason why we'll get to in a minute. But I should have said this. My name is Jason Ferrier. I am a realtor. I'm an investor just outside of Central Ohio. I am the housing nerd. We get together every once in a while, a couple times a week in the morning to talk about the housing market. And so that's what we're doing today, talking about these 1% rates. And if you come on, do me a favor, hit the like button. I really appreciate it. Helps the channel out, gets more people involved. Well, let's talk about what would happen if 1% rates were a reality. What would actually happen? If mortgage rates let's pretend they got down near 1% even. Well, what we need to talk about is that mortgage rates obviously aren't the same as Fed rates, but if they did get that low, you would probably have an asset melt up. You would probably see stocks. You would probably see not only stocks, but certainly housing rocket much higher, much higher. You would have the return of stupid, cheap money, right? People making very, very poor decisions with investing, basically because money would be effectively free at that point. And we all know what happened when money got extremely cheap during COVID. What happened? Home prices went through the roof. People were paying 20, 30, 40, 50,000, 100,000, 150,000, 200,000, 300,000, and probably in some cases, depending on how expensive the property was, over asking. So home prices would definitely skyrocket. There would be a ton of money unlocked into the economy if we got to 1% mortgage rates. Think about all the equity that's been built over the past 5 years. And think about all the people that are mortgage free. We're talking 40% of all homeowners have no mortgage at all. 40% of all homes are paid off. Maybe you didn't know that, but you do now. And if that's the case, there's trillions of dollars of equity locked up in these homes that would be unleashed into the economy. I have to think the administration knows that. I have to think they know that. The move-up buyer, I wrote this down, the move-up buyer would be unlocked. And what's the move-up buyer? The move-up buyer is basically the person that has their 3% interest rate right now, and they have no reason to move. Well, what if mortgage rates were 1% or 1.5% or 2% or even 2.5% or 3% or 4%? I mean, we're not talking necessarily has to get to 1. It could get just a lot lower, right? And then all of a sudden you've got all these people that have decided that they don't want to sell because they have ultra low prices, ultra low rates, and they're thinking, you know what? Now's the time. Now's the time. So I think it would unlock the move-up buyer. I really do. I think the move-up buyer would be unleashed into the housing market. And that would probably add some supply at first, but supply is very inelastic. Housing supply does not ramp up overnight. It takes a long time, months, to build a house. And if you've been paying attention at all to my channel or The Uneducated Economist, you would know that lumber supply has been super low. And that translates into the fact that builders have taken their foot off the gas when it comes to new starts and new permits. They're just not wanting to start new projects right now. And so the supply end could struggle a lot after a very short period of supply increase. If you're sitting there thinking for a minute that home prices wouldn't skyrocket because that move-up buyer wouldn't gobble up new homes, or the first-time buyer wouldn't gobble up new homes, you're crazy. Of course they would at a 1% interest rate, right? Any affordability that was gained from a rate decrease would be quickly wiped out from a higher home price. Just look what happened during 2020, 2021, and 2020, early 2022. Interest rates went to next to nothing, saving a bunch of people their monthly payment. But then, unfortunately, home prices skyrocketed, wiping out any resemblance of affordability. So I think that would happen. Investors would win. And I mean, they would win big time. So you've got large investors and mom and pop investors that would certainly come in and compete for single family homes. Look what happened to the institutional buyers when interest rates rose. They backed off the housing market. Heaven forbid interest rates drop. Look out. They're running right back in. Why? Because money's cheap. And they also know that that window of opportunity with low mortgage rates is probably short. That window will close quickly, I think. If it does happen. If it does happen. I got to keep looking down at my sheet because I'm not taking my hands out of my pockets. It's too cold. Sorry. So one of the questions I wrote down was, so is this a signal of economic stress or pending crisis? The 1% talk, even mentioning 1% rates. Is that really a sign of prosperity in the US housing market, or is it a sign of stress? I think it's a sign of stress, and I'll tell you exactly where I think all this is coming from. I could be wrong. I've been wrong many times. I'm not afraid to admit it, but I think it all has to do with commercial real estate. Most people aren't talking about this. Most people don't want to talk about it. But the delinquency rate in commercial real estate right now is extraordinarily high. It's even high in multifamily commercial real estate. And if you don't know how commercial financing works, you should probably look it up, study it a little bit if you're interested in the housing market at all, because it is interesting to know how they work. Most commercial real estate loans they do not use a 30-year debt rate and 30-year term. Most large commercial loans use a very short term, sometimes 10 years, sometimes 7 years, sometimes 5 years. Well, guess what happened during early 2020, 2021, even 2019 probably, when rates were super low? A lot of large landlords, a lot of large investors refied all their properties into super low debt. Guess what? Those terms are coming up for renewal. What happens when they come up for renewal and you're sitting on a 3 or 4% rate, and now you have to move to a 6 or 7% rate? Uh-oh. And not only that, but your property is probably worth a lot less than it was before, especially in the commercial realm. Not so much in the mid-size multifamily yet, but we are seeing stress build in the multifamily as well. And so all these landlords, and by the way, all the government officials, the president of the United States, his entire cabinet and administration on both sides of the aisle, they all are knee-deep in commercial real estate, even residential real estate. Make no mistake, they own assets, even if you don't. And they want those assets to not fall apart. They want higher for longer. So they are aiming, I think, for lower interest rates in order to refi all their commercial debt. Extend and pretend. Extend and pretend. Anything but price discovery, right? Anything but price discovery. And let's be honest. If your term is almost up when it comes to your mortgage, you're going to do everything you can do to get a lower rate. And if you can pull strings at the very top level of the United States of America, well, why not? Why not? Right? We shouldn't be surprised at any of this. But you should be aware of the reality of the situation. Regardless of what you hear on your nightly news or your right wing or your left wing talk show, whatever you listen to, just use basic logic. These are billionaires we're talking about. They don't want their assets to go down. They want them to go up. Do you think they're going to leave interest rates alone and let the market just play out for the next couple years? Not a chance. Not a freaking chance in Hades. So 1% rates could be on the way, and I think it's all designed to extend and pretend commercial real estate, because that, folks, is a $2 trillion time bomb waiting to go off in the next couple years. Somewhere, and you can look this up, there's different amounts I've seen, but anywhere from 1.87 to $2 trillion of commercial debt needs to be refied in the next 3 to 5 years. Next 2 to 3 years. Because it has to be refied. You have no choice if you own that kind of debt. You either have to sell the property and pay it back, right? You have to pay the loan back, or you got to refi it. It's not a 30-year term. So there's a big debt wall coming, and there has to be something done about it to prevent a cataclysmic commercial finance debacle. But none of that matters. What really matters is how far can we kick this can down the road? It looks like they can kick it a pretty long distance, I think. But I'm curious to hear what you have to say about it. Anyway, I saw the 1% thing. I wasn't surprised. I was like, yeah, sure. Why not, right? Again, that's the Fed rate, not mortgage rates. But I look at it like, okay, we can see where their head is regarding interest rates. Instead of leaving them alone, they will extend the demise. So what does that mean for you? What does that mean for you as a buyer or just a person, normal person with real estate? Maybe you're an investor, maybe you're not. But I think something that you should consider is that window, if rates do fall that low, that window could be very short. Because think about it. Like, what happens when the rates drop? After 5 years, or after people realized, oh, this is a really bad situation, rates then skyrocket again. Inflation comes roaring back, and rates could end up even higher than they are now after a few years. And then your chance to refi is gone. So how I will personally use this, not saying this is what the country should do, but if the country delivers ultra low interest rates, you can bet that I'm going to refi all of my residential investments into ultra low rates, extended for 30 years, lock them in, take some cash, and take advantage of the situation. Because I know that in a couple more years, those rates won't be around. They won't be around. It also means that if you're looking for a home to buy, you should know that there's no competition out there right now because rates are still high. Right now, rates are high. If rates drop, competition comes back in. So 85% of the populace thinks that right now is a horrible time to buy a home. 85%. Are you part of that 85%? Or are you part of the 15% that says, well, wait a minute, if there's fewer buyers out there right now and the weather is 7 degrees like it is now, not a lot of people want to look for a home. Could be a good time to go look for one and get a deal. Not pay what they're asking, obviously, but get a deal. That opportunity could be now. Could be. But what do I know, right? I'm just a realtor and investor, just a small one-guy operation out here in the sticks of Ohio. But I'll let you decide. Anyway, let's get to some comments. What's up, John Doe? You were here before I kicked the fire on this morning. Both the golden handcuffs and negative equity would disappear. Yeah, I mean, we're running like 1.6% right now negative equity in the U.S. housing market. So, yeah, any negative equity would certainly probably start to vanish as they refi, I would think. But good morning to you, John Doe. What's up, mortgage nerd? This guy right here, Steve, he knows the mortgage market, the mortgage nerd. So if you're looking for a mortgage or refi, I'm sure Steve can help you out. He's in the comments. We have a couple mortgage folks sometimes floating around in the comments. So how you doing, Steve? Good to see you. Good morning from Guatemala. Again, looks warm there. Yeah, it's super warm. It's super warm. Dropping rates to 1% might effectively be a distribution for investors, a blow off the top of sorts. Yeah, it could be. I mean, mom and pop lose and lose royally. Even talking about 1% rates is insane to me. Like, it makes no sense. Like, why even talk about it? Especially if it's not possible. Although I'm not going to say it's not possible. I'm just saying, like, why even mention it? What's the point? Why get mom and pop all riled up? Why get the housing nerd all riled up? But, you know, we live in a different age than we were before with presidents, you know, and administration. What's up, Christine? Yes, it's very cold here. It's very cold. It would be so busy that I wouldn't even know what my name was. Yeah, mortgage folks like Steve here would have a field day if rates drop like that, right? So, no doubt, mortgage people would do well. Good morning. Not a snowball's chance we're seeing low rates again. Well, Forerunner said it here, folks. He called it. I like people calling their shot. I agree that I don't think we'll see ultra low rates. But I do think we'll see a substantial drop in rates. I do think that'll happen through a mechanism we're not even thinking about right now. Notice how they started up the QE again on Friday, but never called it QE. They can call it anything they want. They can do anything they want. So I'm not putting anything past them, but I think a return to a 1% federal funds rate is unlikely. Unlikely. And a 1% mortgage rate, probably more unlikely. Although, again, you never know. You never know. Yeah. What's up, Coors Light? As a near-term cash buyer, this makes me a bit uncomfortable. It should make you uncomfortable. Selfishly, I would hope they wait a few months before doing something so politician-like. Yeah, it should. Cash buyers would be nervous. Yeah. Anybody who's been saving their money from a cash buyer basis would be at a serious disadvantage. At a serious disadvantage. Because why would you use cash if your borrowing rate's near zero? You wouldn't, right? You wouldn't. It would be, it would be very difficult on cash buyers to compete. No doubt. No doubt. Small fish are losing jobs. Yeah, there's a lot of job loss out there. I mean, again, why do we need lower interest rates right now? Why? Why? If the economy is so good, why do we need them? I don't know. For fun? For future pain? Not sure. I don't know. I don't know if investors will receive the same type of rate. In fact, it would be a horrible move for investor to benefit with the lower rate. But I mean, mortgage nerd, if mortgage rates fall that low, why would they be excluded? They're not going to be excluded from that. And not only that, but all the people that are wrapped up in the administration, all the people that run the state of Ohio, all the people that probably run our county here in Licking County, they all are knee deep in real estate. They're going to want to and they're all investors. They're going to want to take advantage of that. And they're the people that are really closest to the money, right? The people closest to the money will benefit. The people that are furthest from the money will lose, just like it always happens. The Cantillon effect, alive and well, alive and well. Pending crisis. Yeah, it probably is a pending crisis. I think that commercial debt problem is a time bomb ready to go off. Definitely a big problem that nobody's talking about, really. Not a lot of people anyway. I mean, you've probably heard, I've talked about it a few times, but not even I haven't really talked about it that much. It could really blow up. It could really blow up. And maybe it should blow up, right? I mean, isn't that what everybody wants? Right? Everybody wants it to blow up so that things kind of get back to normal. I don't know. Investors should have to get a commercial loan to hold a higher rate than a private people purchasing that hold a higher rate. Yeah, I mean, so I can tell you clearly, Forerunners, how it works is if you're buying a property that is, generally speaking, if you're buying a property between 1 and 4 units, so a single family house, a duplex, a triplex, or a quad, that counts as residential real estate. There are private DSCR loans that you can get right now. And I've been quoted, 6.5% recently for DSCR loans as an investor. So as an investor, I can pick those loans up and they have a 30-year amortization. That's hard to say in the cold. A 30-year am, and they also have a 30-year term. So they're extended for 30 years, just like any other residential mortgage. And so those exist. You can also get a Fannie or Freddie loan, a normal conventional loan as an investor in a lot of situations. And as an investor, you can even get an FHA loan or a VA loan as long as you live in the property. So if I buy a duplex and I use an FHA normal loan that you would for any other home that anybody else would qualify for, or a VA loan with nothing down even, those all exist for investors right now. And if rates drop, those will exist, but they'll be much more attractive, much more attractive. And here's the other thing about all this that's probably, I didn't write this down, but this is a big risk. Think about the property tax situation. Right now, property taxes are in the spotlight because they're crushing homeowners. But If interest rates drop, all of a sudden those property taxes don't seem so bad because your payment went down. Then when all that extend and pretend is over, interest rates skyrocket again. We end up with higher property taxes, much higher property taxes, and much higher interest rates. So it's just bad all the way around. Hopefully they just leave them alone. The game is rigged. Well, it's not necessarily rigged. It's just set up a certain way. And that way is the people closest to the money benefit. The people furthest from the money lose. And it's always been that way. It's always been that way. I mean, I keep hearing that everything's affordable, that everything's much more affordable than it used to be. When I say used to be, I mean like 2 years ago. I keep hearing right now it's affordable. That if you think it's unaffordable, then, well, you just don't know what you're talking about. That's just propaganda. That's just fake news. Is it affordable or not? I'm asking you guys. Doesn't seem very affordable, but that's just me. That's just me. Liar, liar, brain on fire. I'm just looking. Are you a union contractor? I look at your seal there. Looks like mechanical. Are you a mechanical contractor? I can't tell exactly, but it looks like a gauge, like a temperature gauge. So I'm guessing mechanical contractor. Anyway, you guys do great work, man. I used to call on contractors, union contractors all the time and help them with safety stuff. So I appreciate you guys building the U.S. Corrupt Fed dropped rates to help Harris and mortgages went up. Corrupt Fed dropped rates. Right. But notice what it didn't do this time. That's the interesting part. Fed dropped their rate. Mortgage rates didn't immediately go up. They actually went down a lot. Then they bounced back to where they were. But the 10-year has not skyrocketed like it had the other times when the Fed has raised rates. I thought that was kind of interesting what occurred. I don't hear many housing doomers talk about that part right now. They're kind of avoiding that like the plague. But yeah, I mean, look, I think you've got two different types of interest rate manipulation going on. You've got the federal funds rate, but then you've got mortgage rates that I think will be manipulated regardless of what happens with the Fed rate. And the Fed rate's going to help their debt payment, right, as the U.S. Treasury, but they'll figure out a way to get mortgage rates lower. They will. They'll figure out a way to do it. They shouldn't, but they will. Cold. Yeah, it is cold out here, man. You saying Trump wants 1% mortgage rates or 1% benchmark rate? Oh, okay. Thank you for clarifying right now. I'm saying he wants super low rates across the board. He said that the United States should have the cheapest borrowing rates on the planet. So I'm convinced, I'm going to be clear, I'm convinced they want low mortgage rates and they want a low federal funds rate. They want both. Both. I mean, how bad would it be, though, if mortgage rates didn't fall and the federal funds rate stayed low? Then all the people that stack their money into money markets and savings accounts and Robinhood accounts, you're not going to earn anything. You're going to earn nothing. That may even be worse. Sorry, when did we have 1% mortgage rates? We didn't. We had 1% federal funds rates, right? Or lower than that, near zero, or basically 0% federal funds rate. I'm saying that, well, I just said it. So just rewind. I just said it. Pro tip, if you want to follow where rates are, just follow the 10-year Treasury. Right. Exactly. Right. No arguments there. But what would happen, mortgage nerd Steve, if the 10-year did float that much lower? Or there's some way to control mortgage rates lower. I don't know. Again, I'm not in charge, but it looks like they're willing to do anything to get interest rates lower. And the next Fed funds chairman that comes in is just going to be a stoolie anyway, right? I mean, obviously, we all know that's going to happen. QE has started, and 30% price drops in inflated markets like Southwest Florida means a lot of opportunities. Yeah, QE has started. That's a great point. Liar, liar, brain on fire. That's a great point. Like there are opportunities probably right now in a lot of markets to buy at a discounted price. And if interest rates drop because of quantitative easing, oh, could even be a better opportunity, right? Again, just think logically about what they're there to do and how they're operating. Just think logically. Do they want the commercial real estate bubble to blow up? Do they want the auto loan bubble to blow up? How that hasn't blown up yet, I have no idea. I'm like, what? Do they want the private credit market to blow up on their watch and leave their administration going, man, what a nightmare? No, absolutely not. Absolutely not. They want to leave with everybody cheering them out, saying, great. Well, seemingly great. But then on the tail end of that is another round of massive inflation, probably. Who knows? It could be the Weimar Republic for all I know in the future. If the benchmark went to 1, then what would mortgage rates be? They're not correlated like that, right? It's all has to do with the 10-year. They say it's pretty separate. So it really doesn't matter what the benchmark rate is necessarily. Rates would be about 2.5 to 3%. If the federal funds rate went down, you mean? Okay, maybe I'm wrong. But the way I read it from the research I do, it would be kind of independent, right? You've got the bond market way different than the federal funds rate. But if they start buying mortgage-backed securities, that would make a big difference. I was going to say the same. We'll see 1% on the Fed, but peons will get boned like always. Banks can get money for cheap, but gosh forbid we get a break on mortgage rates. I don't know. Again, I think they want to unlock all that equity in the market. When I say they, the administration, the new Fed chair, they all want that. They want to unlock all that equity in the market with all the boomers who have all this equity, and they want first-time buyers to be able to buy. And they think that rates will do that. Instead of just letting it just grind sideways. Nobody wants it to grind sideways. Everybody either wants it to skyrocket or they want it to crash, right? I don't hear a lot of people saying, I want it to just grind sideways for 5 years. But that's probably what we need. Ricky Rick checking in from YouTube. What up, Ricky Rick? If rates go to 1%, that means money printing is happening. With them printing money, it means inflation. So yes, your investments will go up. However, your buying power goes down along with the dollar. Inflation is a feature, right? Not a bug. I stole that from Mike Zuber, but that's what he says, and he's right. And you're right too, Stunfish. Investments will go up, but your buying power goes down. Those with assets win in a high inflationary environment, obviously. And that's what we'll see after 5 years, right? Or after a couple of years, right, of lower rates. Doesn't the US 10 chart need a correction before the next leg up? I don't know. I'm not sure. That thing is weird, right? That thing's been stuck like in the low 4% range while mortgage rates have kind of fallen. It's strange. Like the spread between the 10-year and mortgages has shrunk. I think there's like 30 basis points difference now. I'm sorry. I think we are out of bounds historically by about 30 basis points. So there's a little more room for mortgage rates to fall without the 10-year falling, if that's what you're asking. Quantitative currency proofing. Right. That's what they're calling it, right? Reserve protection, right? They're protecting bank reserves. It's amazing to me the number of people that actually think that like the day of reckoning is coming for banks and investors. Like the day of reckoning is coming very soon in the next 2 months, in the next month, and then this spring. Oh, no, wait, it'll be next year. But all their evidence says that that's not what they're going to allow happen. They're going to do anything they can to keep it propped up. Don't hate the player, hate the game. My guess is Trump mentioned 1% rates to catch some headlines. Probably, although I have to question the intellect of doing that. I noticed recently my local news station to national news started using the term affordability in unison. He loves fighting the MSM. I mean, but how does that help anybody by mentioning 1% mortgage rates or 1% rates, period? If you're Trump, how does that help? We're talking about it because he said it. But my guess is he does want lower rates. I think. And in the abolishment of property tax. Yeah, add in the abolishment of property tax. Yeah, I mean, imagine if a property tax was abolished and mortgage rates went down. Homes would be like starter homes would be like 700 grand in like middle America, not in California. They're already 700 grand in California, but here in Ohio, starter homes would be 500 grand. If you remove property tax and you removed or you lowered interest rates, holy cow. Good morning. It's not affordable. No, Patty, it's definitely not affordable. I thought it was, though. Thanksgiving cost me 25% less, right? Not so much. Operating engineers. Got it. All right, cool. Anyway, I got a soft spot for union contractors because I used to train them all the time. Graph 10-year treasury yield versus federal funds rate. The spreads are blown out. The linkage is broken. You won't be able to ever get a long-term fixed rate loan anything close to the Fed's fund rate. Understood. That's why maybe they go to 0 on the federal funds rate and 1.5% on mortgage rates, right? I don't know. I'm just saying the very talk of 1% rates is mind-numbingly strange to me and counterproductive to what we want to accomplish. We don't need it. We don't need it at all. Markets aren't dumb. Right. The lowest rate the world has ever seen. Yeah, I think that's what he said, right? The lowest rate the world's ever seen. Whew. Why is there a private banking system that is not allowed to be audited? Inflation happening over printed currency that is charged interest. Inflation happening over printed. What's up, Richie Dog, by the way? I mean, if you're a private company, you can be audited. You can still be audited by taxes, right? Is that what you mean? I'm not sure exactly what you mean. There's always been private credit, right? 18 degrees in New Jersey and Zillow has my home price value jump up and then down 14,000 every week with no inventory or sales comps under 7 figures for sale. Yep. And on 7 figures, 14 grand's nothing, right? Oh, you mean you don't have a flood of inventory there? Liar, liar. I sympathize with you in New Jersey. That's a tough market. According to some, inventory there has exploded and home prices are crashing. Unfortunately, that's not what you're seeing. I'm being sarcastic if you can't tell. Yeah, it's a rough market out there, man. New Jersey is rough. If interest rates drop, we'll shift back to seller's market. Of course. What is wrong with you dummies in the comments? I don't know why I thought that was funny. I just do. I'm just trying to read your name. I'm not very smart with those names. They take me a minute, so I don't know what your name means, but it's interesting. Anyway, yeah, you're exactly right. A seller's market will ensue. It'll ensue. But then you have to remember what happens when the inventory is gone, right? It becomes even a bigger seller's market, unfortunately. Oh, look at this. The opportunity is now because high rates keep consumers on the sidelines, allowing investors to have a great array of higher quality options. Oh, man, you are absolutely correct as far as I'm concerned. And that's the reality. And it's like a weird, paradoxical Back to the Future Part 2 sick universe where most people sit on the sidelines thinking, oh, now's a bad time to buy a home. Now's a horrible time to buy an investment property. But what they don't realize is there's no competition. Nobody's out buying homes right now. When 85% of the herd go that way, maybe you ought to go this way, right? I think that's what you're saying. And I agree with you. I think it's, if rates don't drop, okay, well, then we could be in this deep freeze, no pun intended, for a long time. But if rates do drop, look out. Look out. Competition back. The Fed could start buying 10-year bonds. They could absolutely buy 10-year treasuries. They could also buy mortgage-backed securities, right? They're letting them roll off right now. They could start buying those as well. I mean, think about it. They stopped quantitative tightening and started quantitative easing immediately. They didn't wait. They're like, time to go. Here we go. Why doesn't the USA create its own Fed and stop blaming and stop being robbed and charge interest? If there's a private bank known as the Fed, which no one can buy stock into, and it's not allowed to be audited. Oh, I see. You're saying audit the Federal Reserve. Is that what you're saying? Yeah, I don't know, man. It's like, I don't see any sign of the Fed being gone. I don't see any sign of the Fed being audited. I don't see any sign of the buffoonery and trickery being taken out of the monetary system. I see no sign of it. It just continues. And I remember when it was supposed to leave because of Doge. I remember when it was supposed to leave 8 years ago, 6 years ago, 4 years ago, 2 years ago, 1 year ago. You heard more than one person say, once we get this fraud out of the system, we'll be able to get back to normal. Has it happened? Absolutely not. So just know what you're dealing with and play accordingly. That's how I do it. I'm not waiting on the fraud to get out of the system. I'm not waiting on the Fed to be audited. I'm not waiting on the evil investors to be regulated or institutional buyers to be, handcuffed. You got to wait on, you can only wait on yourself, right? So you got to do what you got to do and work the system to your advantage. You have to be a capitalist. You have to be. If you want to own assets and get ahead and be part of the top 20%, you have to be. That's just the hand we've been dealt. I don't think it will ever get back to the way it used to be, whatever, that means for you. I just don't see it happening. So recognize that, internalize it, and do what you got to do. And that's why I was saying earlier, now may be the time to go out and find an asset, because there's not a lot of competition as regarding real estate assets. There's tons of competition, and obviously assets are highly inflated in a lot of areas, but there's not a lot of competition out there. So now's the time maybe to find a deal, not pay what they're asking. People always get that confused. I'm not saying go out and pay what they're asking, but definitely find a deal. Did you hear about the new 100-year mortgage where the loans get passed down through generations? Right. That's next, right? I mean, who knows, right? I mean, it's anything's possible. What are your thoughts on someone buying a new property as a rental at this point as an investment? I'm not sure at these prices this is a good choice. Oh, hey, Patty, how you doing? It all comes down to the cash flow and the analysis. It all comes down to it. But if you can find a new home right now, like a brand new build, and get a really low rate, and it cash flows well, and you plan for the worst, right? You're planning for, hey, property taxes going up. Don't plan on large rent increases. Run your numbers. And if it beats the average deal in your market and it beats your ROI requirement, then it could be a great opportunity. Obviously doing inspections and all that other stuff too. But yeah, it just has to meet your buy box and has to meet your ROI requirements. I've actually made offers on new homes lately because builders are making, not in Ohio. I made offers in other states because builders are giving away great interest rates right now, and they're fire selling their properties. And Patty brings up a good point. That could be that could be an opportunity right now for you. Like shop, if you're looking for a new house or a house to move into, to buy your first house, go look at new homes, depending on where you live. If you're in Ohio, there's not a whole lot to pick from with new homes. But if you're in other areas of the US, go find some new homes and, have the builders compete against each other and then compete against existing homes in that same area. All that's possible. Obviously, hyper-local specific. Hyper-local specific. I must have missed someone in the chat wanting 1% rates. I think the only person who wants 1% rates maybe is Steve, the mortgage guy, but I think even he's probably like, that's probably not great for the U.S. health of the U.S. housing market in the future. Anyway, I thought this was interesting, and there was something else here I had for you guys. Oh, yeah. So looking at all these rates and all this hypothetical talk, which is fun to talk about, but we have to deal with reality. I cover over 3,000 housing markets throughout the U.S., not just 85. I cover over 3,000 housing markets in the U.S. And Thursday night, I will go live. We will dive into all the latest housing market data. I was doing my lives usually on the housing market in the morning, but I'm going to start maybe doing some more evening lives to open up the time more to people that are working during the day, who can't attend and want to. So I've had the request to do lives some more in the evening. So Thursday evening, I will go live. We'll look at all the latest housing market data. I'm also going live tonight on my Ohio channel. I have an Ohio only YouTube channel. I'm going live to talk about all the latest housing market data. I probably won't be outside for that because I got to admit my toes are freezing, my hands are freezing, and it's very difficult to navigate the laptop with that. We're in 47 minutes. I got 30 people on. Do me a favor, hit the like. If you're coming on, that's all I ask. The new Fed can just begin QE and buy the 10-year. Maybe, yeah. I mean, it's kind of a perfect storm, right? I mean, I don't see that new Fed chair coming in and like dissenting from what Trump wants. I don't see that happening. He's putting him in specifically because he wants somebody in who basically is a stoolie, right? Does what he wants. Liar, liar. Southwest Florida property tax problem is tying tax rate to inflated home values. Yeah, it's fraud. In New York City, my family turned 65 and 75% of property tax. School tax was removed from seniors' homes so they could stay. Yeah, the property tax thing, liar, liar, is a big problem. It's a big problem. And it's a problem on multiple fronts. Like, I mean, abolishing property tax sounds good, but if you abolish it for everybody, including investors, what do you think is going to happen to investors? They're going to buy more single-family homes, right? They're going to buy more real estate. And you also have to replace the revenue somehow. However, I don't like and I despise being taxed on the unrealized inflated value of a home. So it's a catch-22. There's really not an easy solution. I think there are only trade-offs. That's my opinion on it. But the property tax thing is not simple. And there are people, by the way, that think Florida has already abolished property tax, but they haven't. Nobody has. There isn't a state that's abolished it. It's still alive and well. And there needs to be a solution there. But yeah. So look, you guys have been great this morning. Thank you. I'm going to end it. Give me a thumbs up, share the video, subscribe to the Housing Nerd. Stay warm, people. It is freezing. It is freezing. One home, one retiree. I'm not sure what that means exactly. Talking about property tax? Yeah. Anyway, I got distracted, but peace out. Have a great day. Stay warm. I'm the Housing Nerd, and I am out. OUT.